Hello viewers, welcome to my channel. I'm Hasham. So far 12 problems I've completed on computing the income from business or profession. In this video, 3 more problems, 13, 14, 15 I'm going to explain. So 2 models are there in computing the income from business or profession. The first model is profit and loss account will be given. By using the profit and loss account, we have computed how to find the income from business according to the provisions of Income Tax Act. Now we are going to do the second model problems where the receipts and payments account will be given or income and expenditure account will be given. So this income and expenditure account and receipts and payments account will be prepared by normally professional people. So from here onwards we are going to compute the income from profession where income and expenditure account will be given or receipts and payments account will be given. So these are completely new type of problems. So watch till the end, don't skip in between. We don't know which type of problem will be asked in examination, whether P&L account will be given or receipts and payments account is given. So how to compute the income from profession, I'm going to explain. So before starting the 13th problem, I expect my viewers to have a printout of the problems which I have given in the link under my description. Take the screenshot of the points, then I'll explain in detail every point in 13, 14 and 15th problem. Now, see the problem number 13. Income and expenditure account of Mr. Amresh Kumar, an advocate of Nalgonda for the year ended 31st March 2020 is as under. Compute the professional income for the current assessment year and tax liability. So here income and expenditure account is given. The excess of income over expenditure is called surplus. Simply name is changed. Actually what we call the profit and loss account in a trading business, the same type of profit and loss account will be prepared by professionals in the form of income and expenditure account. We call it as profit there, here we call it as surplus. So surplus or profit means same. In trading organization they call it as profit. In professional organization they call it as surplus. So here surplus as per income and expenditure account is 4,16,000. The procedure of computing the income from profession is same when income and expenditure account is given. The only names changed. Instead of profit and loss account, we call it as income and expenditure account. Instead of calling profit, we call it as surplus. So we begin with surplus given as per income and expenditure account. So computation of income from profession of Mr. Amresh Kumar for the assessment year. Surplus as per income and expenditure account 4,16,000, just like a profit. Now we add back inadmissible expenditure. The expenses which are not allowed by Income Tax Act, but it is debited to income and expenditure account. What are the items? First one, office rent. It is allowed as deduction. So before seeing the items, see the other information given. Closing stock of court stamps, 2,300. That means this advocate is purchasing the court stamps. That is the revenue expenditure. But out of the total court stamps purchased, 2,300 are unused stock. So this 2,300 will be disallowed because it is not consumed. And office expense include 23,000 as personal. Personal expenses are not allowed as deduction. So office expenses 23,000 will be disallowed because it is personal. That's it. Now from beginning debit side, office rent allowed. Office expenses. Now office expenses it is given. Office expense include 23,000 as personal. So 23,000 office expenses disallowed. Office expenses personal 23,000 disallowed. Then salary to staff allowed. Court fees and stamps. Actually it is a revenue expenditure. But out of the court fees and stamps purchased 27,600, some stock is there of court stamps. The stock of court stamps are 2,300. So whatever 2,300 stock is there unconsumed, that 2,300 will be disallowed because it is not used. Purchased the stamps but it is unused. So 2,300 disallowed. Then income tax, specifically disallowed in every problem. Then printing and stationery allowed, municipal taxes let out. That means they are having some property which is let out. On that property, municipal taxes are paid. It is not related to profession. So disallowed. Municipal taxes, let out property, disallowed. Traveling expenses allowed. Telephone charges allowed. Shares purchased of a limited company. It is the investment. It's the capital expenditure. Not allowed. So shares purchased, disallowed. Then books and journals. For a professional person, he has to spend the money on purchasing books and journals. It is allowed as deduction. Now, life insurance premium, that is a personal expenditure, disallowed, 18,400. So we have seen all the debit items which are disallowed. So take the total of this, you will get 1,35,700, add up 1,35,700, 571,700. Now, credit side, we see which are the incomes which are not professional income, we deduct. Now, credit side, rent received. Actually, rent received is taxable under income from house property, not a professional income. So deduct. Rent received 1,84,000. Then dividend received is taxable under income from other sources. It is not a professional income. So deduct dividend received. Next, special fees. Special fees is a professional income. He is an advocate. He is providing services to the clients. So special fees received is a professional income, nothing to be done. Yeah, special fees is a professional income. Then gifts from clients. The professional may receive the gifts from clients in appreciation of their services. Income Tax Act says any professional receiving gifts from the clients in appreciation of services is a professional income. Nothing to be done. Only the incomes which are not professional, we should deduct. Then gifts from client is a professional income. Interest on bank deposit, it is taxable under income from other sources. It is not a professional income. So deduct interest on bank deposits, 92,000. Then insurance claim. Insurance claim received is a personal income of the professional. Assessee. It's the personal income of the assessee. It's not a professional income. So insurance claim received is not a professional income. Deduct. Then an examiner's fee, that is a professional income, and legal fees, that is a professional income. So only non-professional incomes which are not taxable under income from profession are rent received, dividend received, interest on bank deposit, and insurance claim. These are not professional, so we deduct. Take the total, 4,14,000 is the total. Deduct 4,14,000, you get 1,37,300. This is the income from profession. So you have seen, it's very easy to compute income from profession if income and expenditure account is given. Exactly same method what we have done in profit and loss account. But in this problem, in examination, you should not confine yourself only in computing income from profession. Apart from that, you have to write the working notes. In working notes, so many points you have to write. Example, this legal fees, examiner fees are the professional incomes. We should not consider. Then insurance claim is a personal expense. Interest on personal income and interest on bank deposit is taxable under income from other sources. Gifts from clients received by a professional is a professional income. It is fully taxable. And special fees, that is also a professional income, nothing to be done. Dividend received is taxable under income from other sources. Rent received is taxable under income from house property. Like this, in working notes, you have to specify what treatment you have done. That's it. Now I am going to start the next problem, that is problem number 14. Dr. Gorakhnath submitted the following statement: compute the income from profession. But in this problem, first time we are seeing receipts and payments account is given. So how to compute the income from profession? From receipts and payments. So debit side receipts, credit side payments. Some adjustments are given. Stock of medicines at the end of the year, 10,000. The medicines are purchased, but all the medicines are not sold. some medicines are still in stock. How much is the medicine stock? 10,000. At the beginning of the year, WDV of the assets, machinery 2 lakh, building 8 lakh, furniture 30,000. Why it is given? Depreciation is allowed on machinery, on building, on furniture. The rate will not be given. The depreciation rate will not be given. You have to remember what are the rates of depreciation on machinery, on building, on furniture. That I am going to explain. Now, how to compute the income from profession when receipts and payments account is given? First of all, computation of income from profession of Dr. Gorakhnath for the assessment year particulars. Here, there is no profit as per profit and loss account. Here, we are given only receipts and payments. So, first we take receipts. Only revenue receipts of profession will be taken. If the receipts are not of a professional type, we should not take. You have to identify which are the items. He is a doctor. You must know what are the normal receipts of a doctor. Now here, receipt side. Consultation fees. Consultation fee is a professional income. It's a revenue receipt. So we should take consultation fee 3 lakh. Then comes visiting fee. Doctor will visit the patient's place. So he will get visiting fee. That is also a professional income. The next one is sale of medicines. Medicines are sold. That means it's a professional income. Then next one is dividend. Receipt side, dividend received is given. Dividend received is taxable under income from other sources, not a professional income. Don't take dividend receipt. Interest on fixed deposit. Interest on fixed deposit is taxable under income from other sources, not a professional income. Only professional receipts we should take here. Only 3 items. 5 items are given. Don't take dividend, don't take interest on deposit. Over. Now I am coming to the payment side. First payment and ambulance van rent. Ambulance van rent. It's a revenue expenditure. It is allowed as deduction. How much? 34,000. Ambulance van rent. Then purchase of medicines 30,000. In the receipts and payments it is given purchase of medicine 30,000. In adjustment it is given stock of medicine 10,000. Out of 30,000 medicines purchased, 10,000 was remaining unsold. So that 10,000 will be deducted. So 30,000 minus 10,000, 20,000 will be allowed as deduction, revenue expense. Then salary to staff, it is allowed as deduction. Salary to staff 15,400. Then next comes income tax paid, it is not allowed as deduction. Purchase of surgical equipment, this is a capital expenditure, it is not allowed. Depreciation is allowed on purchase of surgical equipment. But the amount paid for purchasing the surgical equipment is a capital expenditure. We should not allow it. Only revenue expenses are allowed. Then purchase of life-saving equipment, again it's a capital expenditure, not allowed as deduction, but depreciation is allowed. Then purchase of shares, it is an investment, it's a capital expenditure, not allowed as deduction. Water charges allowed, 600 rupees water charges allowed. Then after water charge, telephone charges 2,500 allowed. Then electricity 1,200 allowed. Donations are not expenses of the profession. Donation is something is given personally. So donation is not allowed as deduction. Whether profit and loss account is given or receipts and payment account is given. In working note you should write down donations are not allowed as deduction. Then general charges 4,000 allowed. Then subscription to journals, it is allowed as deduction. Because the professional people have to subscribe, have to purchase the journals and books. Then purchase of books. Purchase of books is a capital expenditure. It is disallowed. But depreciation is allowed on books at the rate of 40% given by the Income Tax Act. The books will not be allowed as deduction. That's all. So we have taken all the items, revenue expenses we have taken. Take the total of these revenue expenses, 83,600 total minus 586,000 minus 83,600, 502,400. Now, deductions allowed as per IT rules. Now here it's very important. You have to remember the provisions for depreciation as per income tax rules. It is not given in the problem. You have to remember. Depreciation on machinery. The general rate of depreciation on machinery is 15%. Now here, machinery is already there in the beginning of the year 2 lakh. In the adjustment it is given beginning of the year WDV of machinery is 2 lakh. And during the year some more machinery is purchased. That is purchase of surgical equipment. Purchase of surgical equipment is machinery. So 2 lakh rupees at the beginning of the year and 2 lakh rupees new machine purchased. So total 4 lakh rupees machinery. So 4 lakh rupees into 15%. This 15% is given by the Income Tax Act, Income Tax rules. It is not given in the problem. So calculate 15% of 4 lakh, you'll get 60,000 depreciation. Similarly, depreciation on building. It is given in the problem in adjustment. Building at the beginning of the year is 8 lakh rupees. Depreciation rate on building is 10% specified by income tax rules. So 10% of 8 lakh 80,000. Then depreciation on furniture. At the beginning of the year, furniture was given in adjustment 30,000. Rate of depreciation on furniture 10%. So 30%, 30,000 to 10%, 3,000 depreciation. Next comes depreciation on life-saving equipment. Income Tax Act has specified if an SSC purchase life-saving equipment, depreciation at the rate of 40% will be allowed. So here, payment side you can see purchase of life-saving equipment 1 lakh. So during the year 1 lakh rupees life-saving equipment is purchased. 1 lakh into 40%, 40,000. Then depreciation on books. Last item payment side it is given purchase of books 13,000. The rate of depreciation on books 40%. All these percentages you have to remember. Machinery 15%, building 10%, furniture 10%, life-saving equipment 40%, books 40%. So 13,000 into 40%, 5,200. Now take the total of all these. It comes to 188,200. Deduct 502,400 minus 188,200, 314,200. This is the income from profession. One point you remember always while watching the video, keep a notebook, calculator, pen ready. Write down whatever provisions I'm explaining. Then only you can be able to remember. And these provisions you have to write in working notes in your examination. Right? Particularly the percentages of depreciation not given in the problem, you have to remember. That's it. So we have completed problem number 14. Now I'm coming to problem number 15. Dr. Kashipati submitted the following receipts and payments account, compute income from profession, just like the previous problem. Receipts and payments account is given, he is a doctor. So again, similar to the previous problem. But additional information, so many additional information is given. First I discuss the provisions regarding additional information. Stock of medicines at close. So medicines were purchased, but all the medicines were not sold. Some medicines purchased but unsold. So this unsold medicine will be deducted. The payment side you can see purchase of medicines 90,000. Purchase of medicines 90,000. Out of 90,000, 12,000 medicines are unsold. So deduct 12,000. 90 minus 12, 78,000 medicines will be allowed as deduction. At the beginning of their WDV assets, machinery, building, furniture, just like the previous problem, we have to calculate depreciation on these assets. Consultation fee due from Andhra Pradesh government under Arogya Sri scheme 1,90,000. One point you remember, when the SSC is preparing receipts and payments account, we assume that the professionals are following cash system of accounting, not mercantile system of accounting. The mercantile system of accounting will be applied by business people. But these professional people like doctors, advocates, chartered accountants, normally these people will maintain the accounts on cash basis, not on mercantile system. So what is the difference? In cash system of accounting, we take only cash receipts and cash payments. Any outstanding amount should not be considered. Whatever cash received, that only will take. The cash which is receivable, it should not be taken. Similarly, whatever payment is made, that payment will be taken, but outstanding amount will not be taken if we follow cash system of accounting. In this problem, it is not specified that the doctor is following cash system, but receipts and payments account is given, so we assume that the doctor is following cash system of accounting. So any amount due but not received should not be taken. So here, consultation fee due from AP government under Arogyasri scheme. Due from government means not yet received. So this 1,90,000 should not be taken. In working note you should write, it is assumed the SSC follows cash system of accounting, so amount due from government under Arogyasri scheme is not taken. Next, ambulance van rent outstanding 18,000. Just now I told you, if he follows cash system of accounting, outstanding expenses should not be considered. So here van rent outstanding should not be taken. Ignore. During the previous year, he received 4 lakh rupees from a private nursing home and the same is not yet recorded. It is unrecorded receipt. Already received from private nursing home. It's a professional income. When it is received, it should have been recorded. It is not recorded, unrecorded. So we add. Next, in a bomb blasting incident, 2 persons were injured seriously, treated by him. An expenditure incurred 82,000 is not yet recorded. Now, Income Tax Act says if any expenditure is incurred, it should be recorded. The doctor has treated some bomb blast incident injured persons. On that 82,000 expenditure was incurred, paid. So it should be allowed as deduction. These are the adjustments. Now I am coming to the consultation fee. Revenue professional receipts. Consultation fee from general 4,20,000, from under Arogyasri scheme 1,60,000. Both are consultation fee. Consultation fee received from general public and consultation fee received from Sri Arogya scheme. It's a scheme of the government. So both are receipts, both are revenue receipts we should take. Consultation fee general 420, under Arogyasri scheme 120. Total 580. Next, visiting fee is a professional income. Take it 75,000. Sale of medicine, it's a professional income 61,000. Dividend received is not a professional income, it is taxable under income from other sources. So in working note you should write down dividend is taxable under income from other source. Interest on bank deposit, that is also not a professional income. It is taxable under income from other sources. Only working note you write down. Now I am coming to the payment. So total of receipts we have completed. That comes to 7,60,000. So these are the items we have already considered. Now payment side, ambulance van rent. Ambulance van rent paid is 24,000 and outstanding is 18,000. Ignore outstanding. Assuming that the SSC follows cash system of accounting, only rent paid will be taken. 24,000 will be taken. Say, purchase of medicines 90,000. But all the medicines are not sold. Some medicines are unsold, stock. So deduct 12,000. So 90,000 minus 12,000, 78,000 allowed. Next comes salary to staff 70,000 allowed as deduction. Then comes income tax paid 3,000 not allowed as deduction. Purchase of surgical equipment, it's a capital expenditure not allowed as deduction, but afterwards depreciation will be allowed at 40%. Next comes purchase of surgical equipment 15%, normal depreciation, machinery. Whereas purchase of life-saving equipment, it's also a capital expenditure not allowed as deduction, but depreciation is allowed at 40% on life-saving equipment. Water charges 500 allowed. Then comes electricity 1200 allowed. Next comes a telephone charges 3,000 allowed. Next comes purchase of shares. When shares are purchased, it's an investment. It's a capital expenditure not allowed as deduction. Donation 100 not allowed as deduction. Subscription to journal 400 allowed. Next, say general charges 4,200. The general charges 4,200 allowed as deduction. Next comes purchase of books. It's a capital expenditure not allowed as deduction, but depreciation 40% is allowed. Balance, ignore, we don't require balance. So we have taken all the items of expenses, revenue expense. Take the total of revenue expense 181,300. So 716 minus 181,300, 5,34,700. Now we have to allow deductions given under Income Tax Act. Under income tax rules, what are the deductions? First of all, depreciation on machinery. The machinery at the beginning of the year was 1,04,000 and during the year machine purchased 2,05,000. So total machinery 1,04,000 plus 2,05,000 into 15%, 46,350. In the payment side, it is given purchase of surgical equipment, that is machinery. So add up both, 15%. Depreciation on building. In the adjustment, it is given at the beginning of the year, building value was 6 lakh. 10% is the rate you have to remember on building, 60,000. Depreciation on furniture. In the problem adjustment, it is given furniture at the beginning of the year 15,000. 10% is the rate, 1,500. Depreciation on life-saving equipment. Payment side, you can see purchase of life-saving equipment 1 lakh. 40% is the rate, 40,000. Depreciation on books, 40%. On the payment side, you can see purchase of books 3,000. 40%, 1,200. Now, expenditure incurred on bomb blast incident. Expenditure already incurred. It will be allowed as deduction, 82,000. Take the total of all these 2,31,050. This is the expenditure allowed as per IT rules. Deduct, you will get 3,03,650. Now, add unrecorded income. The SSC has received an income from other nursing home, 4 lakh rupees, but it is not recorded. Now we add up unrecorded 4 lakh, so total 7,03,650. 7,03,650. This is the income from profession. That's so in this video I have explained you 3 problems, 13, 14 and 15. In these problems we have computed income from profession. It is entirely different from earlier videos. So if you want perfect knowledge, watch all the videos from beginning till end to get the complete command on the topic of income tax. So if you are satisfied, give a like to the video, share my channel, give your comments, subscribe my channel if you have not yet subscribed, and buy the super thanks which is given below my video. Inshallah, we will continue the next problem in the next video.